SEC, Security and Exchange Commissions, right? For external use, for external users. And who are the users? Again, those investors who want to buy your shares. They would be interested in how much profit this company makes from the last 5 years. Creditors, they are worried about their money. So they want to see the history of the company. That company has a history of making profit, okay? Then we should give them credit. Our money can be recovered. Otherwise, they would be worried about that. If we lend you this raw material, and the chances are that you would bankrupt and you would not pay us, right? Government agencies, they would be interested in regulating the behavior of the company, plus they want taxes, and the public as well, right? For the public, they also want to know that whether this company is good or bad, whether we want to invest or not, or whether this company has a public image or not. So have you heard about different kind of donations by the company? For example, Intel is giving free laptops or computers, or making some e-library in some universities. Why Intel is doing that? Right? It's a charity, also a form of marketing tactic, but in order to impress the public as well. And why they do that? This is for inside purpose? No, this is for outside purpose. And the cost,
friendly.
very nice. And the cost gonna be reported in accounting as well. For outside purposes, the Intel can say that, look, from the last year we distributed worth of $200 million laptops all over the world to students who can't afford it, right? So managerial accounting, it is for, so this is for inside users of the company, which we call them managers, right? So you make information in the form of budgets, forecast, projections, right? So this information, managerial accounting information, is not available for the public, right? Because you need to make decisions to improve the productivity of the company, right? And this information is made with a viewpoint to look the company good in the eyes of outside world, right? So you understand the difference between financial accounting and managerial accounting, right?
Yes.
Managerial accounting is for managers, for managerial purposes. Financial accounting is for outside the company, investors, creditor, government agencies, public, whatsoever, right? And now organizing a business, we know that we have three kinds of business forms, and the new one is also included. So I'm not gonna spend more time here because you already studied this in introduction to business stuff. So I'm not gonna waste more time here. So just with accounting purposes, I'm gonna be touching, some concepts here. So a new form of business has already, already introduced from the last 5 to 10 years. We call this LLC, which is limited liability company. So number one is proprietorship, in which we have one owner. Partnership, we have more than one owner. LLC, we call that members. It can be one, can be more than one. Corporation, which means the owners are called stockholders, and generally they are not one, they are many, and there is no limit for that. It can be 1,000, it can be 10,000, it can be 1 million worldwide, right? Nestle shareholders, Nestle has a history of more than 150 years. Coca-Cola, more than 130 years old company. They have a vast majority of owners, stockholders as well. Personal liability of the ownership. It means if company make a loss, So you need to decide which model you are following. So proprietorship, in proprietorship, you and your business are same. If your business make a loss, you make a loss, right? And the loss would be covered through your personal property as well, right? So that's why we call this personally liable. Partnership. So there are two kinds of partnership: limited partnership and unlimited partnership. So generally, the partnership is unlimited. It means the partner business and partners same. If partnership make a loss, you make a loss, and that should be covered from your personal property. If limited company, then if business make a loss, only that much amount would be lost which you invested. For example, there are two-person who make this partnership. One invested 100,000 and one invested 1 million, right? And you make a loss of 2 million, right? If this is limited liability, then your personal property is not involved, only the one, your wealth that you have invested into the business, that would be lost, right? To cover this 2 million, your personal property won't be involved. If unlimited liability, then A and B both are liable to pay for this 2 million even from their own property. That's it. Any question? Okay. And then limited liability company, name implies limited, so they are not liable. They are only liable up to the amount they have invested into this LLC. That's it. Similarly, with the corporation, the maximum loss is that your share price would be zero. You purchase $25 a share. So how much you can afford the loss? Only $25 will be gone. That's it for one share, right? This is the meaning of liability, personal liability. So this is the the complete detail about proprietorship. We have single owner. It tend to be a small retail store, for example, haircut, hair salon, beauty salon, the noodle shop. It's like that. Proprietor is personally liable, and business record should not include the proprietor's personal finances. What does it mean? Even though the business and the owner are same, but even then, the owner should not involve its personal life, record its personal life into business life. For example, if I have a hair salon, I cannot write it down. Okay, this much I bought $100, grocery for my house, and you are writing in your, hair salon records. No, we shouldn't do that. It's true that in proprietorship, business and owner is the same, but for the business purposes, you record business transaction in the hair, the beauty salon stuff, and your personal expenses in should be your family expenses stuff should be written somewhere else. Okay. Partnership, two or more, we call this co-owners or partners. So income and loss follow through partners. What does it mean, follow through? Okay.
They can share the loss.
They must share the loss. If both parties cannot share the loss, then the loss will be transferred to that one who can afford. Understand or not? Let me explain it. Okay, let me take out this pad and write it down here. So for this one, I need to turn off my video and take this out. So please stay with me.
Okay. Sir, when there is company in, how to say it, go in bankrupt or something, you cannot sue the owner, right? Only you have to sue the company.
We are talking about right now partnership. Yes, for company, you are right.
Yeah.
Okay, so that's why we are learning this. Okay,
Okay.
we were talking about this stuff. Follow through, right? So for example, we have two partners. This is partner A and this is partner B. Partner B, we have AB company. And in AB company, the partner A has invested, for example, 100,000 and his personal wealth is 500,000. So total wealth, 600,000. So 100,000 he invested in AB. The B partner, his wealth is, for example, 20 million. And he invested here 200,000. So his total, for example, his total wealth is 2.2 million, 200,000 he invested in AB. So total AB investment is 300,000, right? So they started the business started growing. After 5 years, what happened? The AB partnership, they made a loss of, for example, oh, sorry.